Let's get started with our soybean panel. Ellen Dearden is here. She's with AgReview out of Morton, Illinois. We hear her Thursday mornings on the opening market report at 8:55 a.m. Next to her is Danny Pfoff, who is with Strategic Farm Marketing. He's in Champaign, Illinois. Opening market report again at 8:55 a.m. on Friday morning. And then Greg Johnson is with us this morning for the soybean panel. He joins me on the closing market report on Wednesday afternoons. Greg's got a funny slot coming up after Paul Cooley and then Jackie Fakes and then Greg and as you may have noticed if you listen, because people are here for such a long time, I tend to audition them during changes sometimes. And Greg was in that slot in the afternoon anyway. He'd been Monday in the cash grain segment. Cash grain segment in the closing market report went away, and so Greg then was on Wednesday afternoons in the cash grain segment, and Jackie retired, and Greg was just doing it, and I would fill in with other people from time to time. And finally, it was about 7 or 8 months later, I called Greg to talk to him, and I said, "You do know you're just the analyst, right, for the afternoon?"
Oh, I thought I was still auditioning.
No, he's still. He might be. Do you want? Don't go away. Don't go away. No. But you know the relationship. I think that the radio station, whoever happens to be in my seat, and you all have with the analyst is important. And so that's the reason they're there for such a very long time, and we're very careful about who goes into those slots. And I do hear from you about who you like as well. Particularly I hear, because you understand when I'm auditioning, apparently, I didn't realize that exactly, but you do understand that, because I heard when Wayne Nelson retired, and I kept having folks on, and I heard about who you wanted to have in that place. Naomi Bloom has taken that slot. We're glad to have Naomi on. She's missing us today, mostly because she's like a couple of others in Denver at the Commodity Classic still. So that's kind of, we have this relationship, and I think you mostly have the relationship with the analyst, and it's important. You know which days you like to listen to. You know what, you kind of have an idea what the analysts are going to tell you. What their natural tendencies are. Zwicker always told me I was naturally bearish. And so, when I'm asking questions, he's not wrong. I'm naturally bearish most of the time. You probably figured that out. Good thing to know about the person who's asking the questions. So, at this point, I'm not going to ask a question. I'm going to let the folks up here take 5 to 6 minutes each to tell you a little bit about the marketplace. I think, Ellen, I will give you the opening comment. Thank you for coming over from Morton today. That was a long drive.
Yeah, it was a long, rainy drive.
Well, yeah. I left early this morning so I could unload all this stuff before it rained. You'll have a rainy drive on the way home. Do we have jury markets to look forward to, in your opinion?
Yeah, we do.
She's done.
Next.
When we listened to Joanna talk this morning, first thing, we heard about what South America crop prospects are. And that's really been building for, 15, 20 years. Since the turn of the century, we have really done a lot of education to get South American production up and going. And now we're kind of surprised to see how big that production is. And I think that's, kind of stupid on our part. But we need to take a serious look on the bean side of things, not just the production side, but the demand side. Because like in corn, we have 3 different demand buckets to fill. That's easy. We have exports as one of them, feed use is one, and ethanol or processing. But in the bean side of things, we have processing and we have exports. And we're really out of the export market at various times of the year. And we're really moving in that direction rather rapidly here right now because Brazil is coming out and it looks like their crop prospects are seriously large. When you look at the total South American production, how large that is, U.S. production of soybeans now just pales in comparison. And yet we're kind of out of the export market. And I'm going to say that it's not all just a problem with policy on exports, but it's also a very strong dollar. That hurts us quite a bit in that market. So we need to keep that in mind. On the processing side of things, the processing margins have really slipped lately, and that makes it difficult to want to continue the strong pace that we ended the year with on soybean processing. In this location here, it's really a processing market. So as processing margins deteriorate, we need to keep that in mind. That means weaker basis and not necessarily a strong board. We may not have to drop a tremendous amount from where we are now on the board price, but it's certainly going to affect the basis being weaker. Now, on the Illinois River, which is our market, the loadouts of beans have been slow for the last several months, and they've really trickled down tremendously. So now we have 2 buckets, use buckets, that have leaks in them, and I think we need to keep that in mind. So rallies that go back into that $10.50 range, and keep in mind November beans slipped under $10 this morning. Rallies back up into that $10.50 range. You ought, if you haven't been selling any new crop beans, you better look pretty carefully at that. Downside risk, $9.50. On the old crop beans, and there are some old crop beans left in the country, of course, nobody would raise their hand and say, well, I have a few, but they're the phone calls that I get in the office is, hey, I got this last 20%, well, maybe a little more than maybe 30% of my old crop beans yet to move. And, you know, that's kind of a dead dog. We're going to have a lot of trouble there, especially in markets that are processing markets, because I think that's just going to be a basis situation that looks poor. So keep in mind that we're probably in the middle of a trading range. We probably are going to hear an awful lot more about tariffs and all the horrible things that will happen with tariffs. I'm not so sure how that's going to shake out in the long pull. We're really not in any favorable position to move stuff into China. They're the biggest buyers of beans. They say they only need 95 million metric tons of soybeans to be imported this year. But they have been moving their beans out of their farmer-owned situation, their government-owned stocks, into their processors because their processor margins are good. So we need to keep in mind that we're kind of out of that big market on the export side of things. We need to develop and work on those markets. And who knows what's going to happen on the bean oil for biofuels. I have no clue. We really have no policy right now. We have tentative policy, but that's not anything you want to hang your hat on. So until we see meal and or bean oil both move higher, we're going to have a very difficult time in beans in 2025.
Danny Pfoff?
Sure. Great comments, Ellen. I think we should thank Todd for setting this up on Tariff Tuesday. I really appreciate that. And, you know, you guys go talk about it and do your best. So here we are. Beans were kind of a tougher situation before this tariff rhetoric. And then, you know, Trump is supposed to make comments later today to Congress. It's not a State of the Union address. So to say it's a fluid situation doesn't even really give it justice. You know, a lot of times my line is ask me in an hour because, you know, I was on Twitter the whole time this morning, and Zelensky sounds like he's more willing to, you know, maybe we need to redo that Oval Office visit. That didn't go so well. Asked for a redo on that one. And another thing, off topic but related, tomorrow is the first day of Lent. My daughter's 6. She's proclaimed she wants to give up nothing this year. I was explaining it to her how it works, and she said, yeah, I don't want to do that. So maybe Trump will give up tariffs for Lent. That might be that might get his polls up a little bit. But anyway, all jokes aside, beans are a tough situation, lots of unknown. I'd like to talk about some things we do know at this point. Our Feb average on insurance is $10.54, current board price $9.99. So you're ahead of the game on that right away on your insurance. I think you got to take a hard look at ECO this year, in my opinion. It's a 95% coverage with a higher subsidy rate this year at 65%. You have till March 17th this year due to the 15th being on the weekend, okay? So we know that. So we'll see where that lands, and I like talking about things we know. Other thing we know, your Ark County price is $12.17. That 5-year Olympic average is $12.17. So that is another leg up higher with your FSA program. We do know you have till April 15th this year to make that decision. And you guys, I don't know what it is this time of year, Feb, March, big things have happened. COVID, Feb 2020, 3 years ago, Russian invasion in Ukraine. You have till April 15th to make that decision. So you have to navigate that with your trusted advisor, but it could be you could call for a switch towards PLC if we have an absolute free fall, falling knife type of situation. But it appears to me, Russia, Ukraine, they might want to come to the table. Mexico's pretty reluctant, I think, to a trade war. They really need our corn. The infrastructure is just such a natural fit to go in there with their railroad. They've struggled with drought in Mexico. I'm getting off topic on corn. I know we're on a soybean panel, but these are all related topics. So the geopolitical front is very fluid. And then one last comment, and I think it'll transition well nicely to Greg, is the farmer's been a really good seller. We've had a really good rally, and you know how I know they've been a good seller? Basis got smoked. Basis got smoked. Spreads widened out. So hats off to the room for taking advantage of that rally. You know, when you have an October average on your insurance at 416 and they're bidding you 470, 480, 490 cash, you know, you take advantage of the rally. You recognize the fund length when you get there. Usually pretty good selling opportunity. So, Todd, I'll take your job. Let's transition to Greg. Have you bought a lot of corn?
We bought a lot of corn and soybeans.
Both, good.
Yeah. Baseball's having spring training right now, so I thought I would borrow a quote from one of the baseball all-time greats, Mr. Yogi Berra, who said, "It sure feels like it's deja vu all over again." Who remembers what happened on July 6th, 2018? Did I hear the word Trump tariffs? Yeah. The price, right 2 weeks before that, in June of 2018, November beans were $10.50. 2 weeks ago, November beans this year were $10.50. That year, beans went all the way down to $8.25 in September before rallying back to $9 by the end of the year. Hopefully, we don't repeat that. But the carryout, I was looking at the month-by-month carryouts in 2018. In June of 2018, USDA's monthly supply and demand report had the estimated carryout for the year for beans at 385 million bushels. Guess where they are this year? 380 million bushels. After the tariffs went on, July carryout 580, August 785, September 845, November 955 million bushel carryout. We actually got over a billion bushel carryout in December, 1.045 before we came back down to 795 to end the year. But my point is these numbers can change. The tariffs had a dramatic impact on exports that year. The one good thing, as Danny said, farmers did a very good job of selling into this rally. It's hurt the basis levels, obviously, but we think farmers are 80% sold on both old crop corn and soybeans. That's the good news. You did a good job selling into the rally. The bad news is I don't think we're more than 10, 15% sold on new crop. I know Todd, when I'm on the radio with him, he asks me, and I say we should be a lot farther along than that. And maybe that didn't look so good for a while, but we all know that prices go down faster than they go up. And so hopefully people took advantage of that and got a little bit more new crop beans sold than what we did. The other thing that I will mention, kind of transitioning to a little positive here, is seasonally, April, May, and June are historically the best time to sell new crop beans. So that's coming up. So keep that in mind. Shameless plug, we offer at our elevator a seasonal daily averaging program. You just enroll bushels and it sells the same amount of bushels every day. And at the end of that 3-month period, historically, that's been a very good price, and it was $1.50 higher than the fall price last year. Can't say that's going to happen again this year, but why not spread your risk out and put a little bit of bushels in that kind of a price range?
If you've got questions, just raise your hand. We'll get them answered. I do have a question for you based on the historical facts that you gave us related to 2018. One of the things that happened in 2018 was the Chinese had a disease, African swine fever, that decimated their livestock herd, their hog herd. I suppose that won't be the case this year. Maybe we can hope, or hope not, that is. Without that, and what we heard from Joanna this morning related to exports both from Brazil and the United States and what China has been trying to take or not take, what do you think their imports will be from the globe and or from the United States, and how does that impact what your view is of price going into the fall and after the fall? Because it was really about our export time frame, that September, October, November, December, early January, that was impacted.
Yeah. I think China has invested a lot of money in the South American infrastructure. They plan on buying beans from South America, if at all possible. That's their first choice. We are going to be the seller of last resort. And they still need to buy a lot of beans. You know, South America can't produce all their, or supply all their needs. So we're still going to supply beans to China. But just from an economic point of view, they want to buy beans from South America. Now you throw the political uncertainty on top of that with the tariffs going back and forth. I don't think we want to hang our hat on that. I think we want to be, and I have said all along, we want to be more aggressive in selling beans than corn. I think there's a story out there for corn, and so maybe we try to break even on beans this year and make our money on corn.
And somebody correct me if I'm wrong, because I haven't been watching the news other than what Joe told us. China put a tariff on corn coming into the United States, but apparently not soybeans.
Oh no,
No, it's,
soybeans too.
Oh, soybean. I did not. Okay, soybeans.
Different percentage.
It's 10% on the beans and bigger on the corn.
Is it 15% then?
I
on
believe
corn?
so, and they also banned 3 companies, specific businesses from.
Who'd they ban? Do you know?
I don't know.
Does anybody
It was
know?
very vague.
Tech, not ag company.
Oh,
I
it's
think it was
tech
No, it's soybean
Oh,
imports.
Oh, really?
Yeah, hopefully it was some small independent elevator that doesn't
Hold
export.
it. Hold it.
It was over phytosanitary reasons.
Yeah.
But who did they ban? Phytosanitary, do we know which companies?
Yeah.
Who did they ban coming out of Brazil when they did that? Were any of the big ones in it? Bunge was in that? I don't remember. Okay.
Again, fluid situation, folks.
Yeah, changing by the hour, which tends to be fairly typical at this point. So, do you have a question? Anybody out here? Otherwise, I'll continue on. All right. When you have a question, let me know.
Can I make a comment quickly?
Yeah, you absolutely.
The logistics area has always been a real interest to me, and the U.S. really has not upgraded the port situation for exports, and the rail situation for corn in particular, but also meal going into Mexico, has had a lot of bugaboos because the inspections at the border have been very slow. But China came in and has thrown a lot of money in ports and also in rail out of Brazil. And I think we need to keep in mind that we are really behind the 8 ball on that.
Yeah, I think the last one, at least in New Orleans, that was updated was in 12.
New Twitter.
China suspended soybean exports. CHS, Louis Dreyfus, EGT.
Oops.
Okay, and Bunge was listed there too. And what was the last one? I didn't catch that. Anyway, so I believe that Pan-Ocean. Okay, thank you. I believe that the most recent update or the newest port in New Orleans is in NOS, and that's Japan, consolidated grain. So ports are difficult. We have not had an infrastructure push in them.
Yeah, and Todd, to follow up on both these comments, something I didn't really appreciate till recently, a little bit of a delayed harvest on the front end of Brazil harvest.
Mm-hmm.
But this crop size is,
Massive.
it doesn't matter. 168, 170 million metric tons. It's massive. And the issue for the U.S. export system isn't so much the front end, is the tail. You know, when we take that
How
baton,
long does it go into ours?
yeah,
right?
we take the baton and we become competitive on soybeans again. It may not be as early as we'd like, and that if that tail gets into our harvest September, October, and they're the cheapest origin, that's a problem, and that's besides the tariff issue. Just the size of the South American supply is robust.
So not only did November beans slip under $10 today, but so did September. So, yep.
That's the question, Greg, that Bearish Todd asked you a lot, right?
Yes.
Yeah.
Yes.
Yeah. What's the window look like? Especially if they get in planting early, which they didn't manage this year. But what does that window look like for the exports coming out of the United States, and how much does that impact what we're able to export?
Yeah, it definitely shortens our window. As Danny said, they could be, with a 170 million metric ton crop, Brazil could still be exporting beans in September. That kind of pushes our window back to mid-October, so that's not good. We want that window open as quick as possible, because I didn't want to bring this up either. I guess I'm Mr. Negative Day, but that year the basis levels got to 70 under November for about a month's worth of time, because there was no export demand. So I can speak as an elevator. If we can't export, if we can't sell them, we're not going to bid up for them. I mean, we can only pay what we can sell them for, and that was a problem in 2018.
Boy, I hope we have better news in corn later today.
I do have some good news at some point.
Yeah. Yes, sir.
How do we tie in beans sometimes?
So how do you use how do you actually tie your crop insurance into your marketing? Danny, you want to start? And
I'll
we can
really
work across?
simplify it. You just sell the rally with confidence.
Yeah.
You know, that's to really simplify a complicated thing, because if you're short at the elevator, you get reimbursed with your put, and then you pay the elevator back if you're short. So sell the rally with confidence. You have bushels guaranteed, subsidized with your insurance.
Yeah, a lot harder to sell more grain than you actually think you might end up with. But yeah.
Willingly sell below the cost of production. Always a problem.
Well, I think a lot of insurance policies are below the cost of production anyway, especially soybeans. Corn, maybe not, but especially beans.
Yeah, so he said, should we sarcastically, we willingly sell below the cost of production?
Separate but related, to transition a little bit from that, you know, the Secretary of Ag, Brooke Rollins, has been pretty adamant, you know, we're going to support the farmer. They're going to be kind of in the crosshairs. You know, we're going to have to be up to speed on all the acronyms. You know, they were called MFP in the past. They added a new acronym here recently with this $10 billion on the planted acres. You guys should be hearing more about that really soon. Some sort of pre-filled application on the $42 an acre on corn, 30 acres on beans.
Should be getting their checks.
You got to sign an application, is what we're hearing. And it's an 85% rate of that first tranche.
Wait, what?
The farm
There's more news that I do not know about today than usual.
All right, so
wait.
I'll-
So this is the lame duck session.
Farm Act, okay?
ARA, yeah.
So that's $30 billion.
The money
okay?
that's already been allocated is supposed to be just sent. No,
No, okay.
not going to be just sent. How are they going to pull that off in time?
Hang with
They've
me.
got like 20 days. Go on.
Hang with me, yeah, because the deadline's March 21st, okay? There's $30 billion allocated to this program, okay? $10 billion is just on 2024 planted acres, okay? We're hearing it's going to be some sort of pre-filled application, likely administered by FSA. Do not call FSA today. They're usually the last to know, unfortunately. But they're going to do a first tranche, 85% factor of those dollars.
This is
okay?
the second set of dollars, not the $42.
That's the same $42, okay? And then
Okay.
the $20 billion, okay, they're going to base that off of, I'm going to jog your guys' memory, WIP Plus, ERP. You guys remember those programs? They
Yeah.
gave you higher insurance levels on the crop years of 23 and 24. So there's really double the funding there for that disaster payment, which may be renamed. So this is kind of our sources in DC, what we're hearing. It's not black and white. You're not going to find it on a website quite yet.
I'm going to fact check you real quick because I saw Nick in the back of the room and I just want to make sure that this is right. Oh, where did he go? He was just standing up. He sat down. Do you know, Nick? Is that right? Does that sound correct to you?
News.
News to you too. Okay.
If anybody follows Paul Neefer, you know what I'm talking about.
Oh, DTN Progressive Farmer. I don't remember. which
Yeah,
one.
Progressive Farmer.
Yeah,
Yep.
Progressive Farmer. Okay. All right. Good enough. Back to soybeans.
Can I also answer his question?
Yeah. Oh, yes.
Yeah.
I forgot about his question. How do we do this when we're under
selling
production?
below the cost of production. Most farmers are worried about selling below the cost of production, then having a short crop and not having the bushels. When was the last time that happened? 2012, right?
Yeah.
The drought year. Most farmers I talked to said they made more money in 2012 than they did in years prior or after because of the crop insurance. So I think you can feel very confident selling. You still want to sell at good prices, but I think the insurance is good enough that it should protect you in the case of a short crop.
Ellen, what are you telling producers about what they can do? Well, things change today for you and for everybody else. What do they do?
We're on pause right now, but we were pretty active sellers on this rally, both old and new crop. We really pushed new crop sales up to 40 to 50%, which is tremendously high for us this early in the crop year. And I just felt that we needed to see that kind of protection. And as Danny said earlier, there's still a story on corn, but man, there's not much story on beans.
No, not much story on beans. Any way to make that change?
Plant
Drought.
corn.
Plant
Plant
less
corn?
acres.
Plant corn.
Oh, plant corn. Well, that'll change things. Yeah. Wait till we get to March 31, right? Yeah. And we have that corn number come out. Surely you've got a question. Yes, Harlan. Why is the U.S. dollar so high, and what impact does that have on our export market?
Our government is such a good steward of our finances that
Nice. So if you have soybeans, you've not marketed, new crop, you are now behind the eight ball. I guess, and I think, Ellen, you gave us a price at $10.50, so I know where you're at. So if we get a rally to $10.50, you're going to sell at least 40 or 50% of the crop, I suppose, at that point, depending on what well, I don't know what it depends on. Yeah, it
Well, I
depends
was
on-
1050 was November beans. 1050 November beans.
Yeah, I know.
Okay. I don't really have an upside objective for getting lots more beans sold because I had to really pull teeth to get guys to make sales, new crop sales.
Right.
And again, 50% is pretty aggressive.
Well, I was working with new crop mostly because I think if they've got old crop left, then they'll figure it out between now and whenever, or roll it, one of the two, which apparently happens on time from time to time. So, what do you think, Greg? What kind of targets should they set at this point?
okay, in anticipation of this meeting, I did a little research. And I looked at the price range of soybeans over the last 10 years, whether the carryout's tight at 5% or big at 12, 13%. But the price of beans from high to low, on average, is, any guesses? How the fluctuation between high and low for the year?
$6.
$6. No, too high.
Don't we wish?
$2.70.
Oh, twice.
The highest it's ever been is $3.80. The white in the last 10 years, from high to low, $3.80. The narrowest is $1.40, but $2.70. So let's use $2.70 as a price range, okay? Now, I'm a little bit more negative, I guess, because Todd makes me negative when he calls me all the time. But
Yeah, you're gonna blame me from now on, aren't you? Thanks.
but where we went in 2018, I'm using 870 as a low.
Okay.
But if we have a 270 range, that means 1140 potentially. Now, maybe we don't have the 270 range this year. I'm really not thinking beans are going to $11 without a lot less acres or a drought. But the midpoint of that is 1005. Okay? Everybody can make up their own highs and lows, but the midpoint is 1005. And we're there. A little bit below today, but we'll be back above it at some point in time, hopefully. But I think it comes back to, you just have to look, is there more upside or downside? And if, in my opinion, there's more downside on beans than there is upside. So anytime they're in the upper half of that range, anytime they're above 1005, you probably need to sell beans. And if you get too far out over your skis, you can always look at options. I mean, and I know a lot of people don't like to use options, but you got to get to 50% sold before you even have to worry about that. You've got crop insurance. So, like I say, I think you just break even on beans this year and try to make your money on corn.
Okay, Danny, I'll ask you the same question with a couple of caveats, because you do your strategic farm marketing, the sell crop insurance, and you have some pretty heavy background with ADM and the cash grain situation. So how do you put it all together to make a good marketing plan for soybeans going forward?
I think the ranges Greg alluded to means be disciplined and have offers working. Even if that seems maybe kind of silly, if we have a pretty much $10 beans right now, if that's $10.50 to $10.80, maybe even a little up there, have them working, be disciplined. Don't pull the offers. That's
Cancel if close.
That's a sin in the industry. So be disciplined, have the offers working. Anytime you can sell above that Feb average, that's usually a pretty good business to be in, which we're 1054. Okay. And I do think, to kind of tie this panel with the corn panel, I feel like, to me, tariffs aside, soybeans' best chance is corn, because corn's a much tighter situation. So if we have a situation with the safrinha double crop corn in Brazil, going through the dry season perhaps, or the U.S. Midwest, this seed's still in the barn, beans are going to tag along to some degree.
Okay, so this is the bearish Todd coming out. So we are at 10%, at least at the moment, for old crop. And I think the new crop numbers were roughly the same for stocks-to-use ratio, 10%. Weren't we about that?
Just shy. Yeah.
7.2.
Why? So here's my question. Why is that tight? Because historically that's not tight. That's middle of the road, right? Not
On corn?
Yeah.
We're right at 10, I believe, on
I'm sorry.
corn.
I thought you were talking soybeans.
No,
10.2,
on
I think,
on
on
corn. I switched topics with you for just a second, but I want to know why it is that corn at 10% stocks to ratio, and I ask because I hear this from more than one of the analysts. Why is that? Why does that? Is it the 1.54 that in billion bushels carryout that makes it feel tight? Is tight? Am I wrong about the 10% midpoint? I mean, I want it because and it makes a difference because is it really tight?
I just think that the bigger point is, we're not on fumes. No one's saying we're out of corn, but it makes it interesting when you're carry in from this year. In December, we thought it was 2.1 billion into next year on corn. I know I'm on the bean panel, but I'm talking about corn.
Yeah, no, I switched. Yeah,
But
so
now
we're fine.
But now that carry in is 1.5 billion just overnight with that January report. So in my mind, it just makes that more, if that weather headline, which probably my first year doing this where we don't have some sort of weather market, talk to Eric Snodgrass, I hear about it every day. It makes a weather story that much more consequential on corn. That doesn't mean you get complacent and don't do any marketing, but soybeans will kind of be along for that ride. Corn's in the driver's seat, in my opinion.
Okay. That's bearish, Todd. We'll get back to corn later in the day. I think we're close. Does anybody have a question out here that they want to ask still? Otherwise, we'll get a final word from each of them. Greg, I'll start with you and then work our way back to Danny.
Okay. 3 points when it comes to new crop sales. Lower your sights, be realistic. 2, use the seasonality to your advantage. Sell some in April, May, June, even if you don't think it's a great price. And number 3, if you do use options, please don't just go long calls. An at-the-money call costs 60 cents in soybeans. At the very least, sell a call that's $1 higher, and you can cut your cost in half from 60 to 30. Do not just spend 60 cents on a call. That's just throwing bad money after good, in my opinion. The joke is the farmer told somebody that he put 2 kids through college using options. Unfortunately, they were the broker's kids. So there is a time and place for options. Just be realistic, okay? Don't you can sell 40% of your crop, and I still tell people this. They get upset because the market goes higher. I say you want the market to go higher. You've still got 60% of a crop left to sell. Until you get over half sold, you want the market to go higher. And even then, I would argue you still want the market to go higher, even if you're 70% sold. So lower your expectations, be realistic, and use the seasonality to your advantage.
Greg Johnson is with TGM Total Grain Marketing. We hear him on the closing market report Wednesday afternoons. Ellen Dearden from AgReview is next to him. She airs on Thursday mornings on the opening market report, and it was in Morton, Illinois. Ellen, your final words.
I liked Greg's ideas. The realistic expectations is probably one of the things that I have a hard time convincing people that they're not realistic. But I think also look at all the venues that you have to sell your crop, and don't lock yourself into one location, even if it's the one that's only 7 miles from the farm. Look at whatever's available, and I think you will be surprised at how many places you can do some selling to.
And Danny Pfoff is next to Ellen. Danny, my apologies to it. It wasn't about you. It's one that I've thought about a lot, and I think it might be the FarmDoc team that pushes me that way. So anyway, we'll talk to the FarmDoc team.
I'm not even sure what you're apologizing for, but I'm good with it.
Okay.
Yeah, whatever.
An apology, whatever. Your final word for the day, Danny.
Great comments, both of you guys. I'm happy to be up here with you folks. I just reiterate, I think use offers, but I use those every year. We get a little volatility, a little weather market every year. I think we're kind of back to, we gotta be in the loop on the alphabet soup government acronym of the day, because I think a lot of the government things I was talking about, they might get relabeled, okay? A new acronym. Gave a market outlook. The ERP we thought we knew might become Trump ERP. I'm kind of joking, kind of not joking. That might get relabeled. So stay up to speed. A lot of that stuff I think you will have to sign and agree to. So I think we're just coming into that era. So lean on your trusted advisors, and you really have a safe spring. It'll be here soon.
Give these folks a nice round of applause. Thank you to them.